Well, he's not a fortune teller, but he's pretty darn close. I'm talking about Bill Levitt from Bridgelight Financial Advisors. And for this Financial Friday, we are navigating volatility during a geopolitical uncertainty, or uncertain times, I should say, in our world today. Bill joins us back on the show now. Hey, Bill, how are you?
I'm fantastic, Melissa. How are you this morning?
I'm good. I never want people to feel like I'm putting too much pressure on you. So I know you're not a fortune teller, but I mean, you definitely give us peace of mind in our household because we get to work with Bridgelight Financial Advisors. So I, have to say it.
Well, thank you. The caveat there is that the crystal ball fell off my desk a long time ago.
Well, I mean, you wouldn't know, though. I got to be, you wouldn't know, Bill, from my own personal experience, you wouldn't know. But yes, you're pretty darn close to being, I would say, a fortune teller, because you're right on the money, no pun intended. Let's talk a little bit about, again, when we're saying geopolitical uncertainty, what exactly do you mean by that? And what is the relation to our finances?
Well, investing is something that can be emotional for people. And when we experience something significant, like COVID or something major, it has a tendency to have an emotional impact on people. And right now we're experiencing geopolitical uncertainty with the war in Iran. So, this is a time for people to gain perspective on that situation or situations like this, pertaining to how they are managing their investment money.
What would you say, Bill, are common reactions that you guys would caution against when you're seeing investor behavior change because of things happening across the globe?
Yeah, there's a tendency to create a lot of emotional decisions, Melissa, especially because people are listening to the news, right?
Mm-hmm.
But a lot of people, what they do is some common mistakes we see is they attempt to time the market based on headlines. What's the headline saying? This, or they're moving cash after the market has already gone down or had some downward motion. And then other people get really concerned and they over-concentrate their money in things that are very safe but have very little return on their money. Unintentionally, they're locking in losses or they're reducing long-term returns.
So how do you position through uncertainty, Bill?
I think one of the things that people have to do is really concentrate on where they are at a particular time in life, first off. What are their goals? What are their objectives? And make sure that how they're investing their money is aligned with that. That's really number one, and making sure that they understand where they are, because the most important part is that. And then, volatility is pretty normal. I mean, we go through these periods of time where people have an experience this kind of volatility. But if you have a well-structured portfolio already that's really positioned and you understand what your risk score is, all right, risk score is really important. Mm-hmm. It tells one how much risk they're willing to take. If you don't have a risk score, you should have somebody do one for you. And that then aligns your investments so you're comfortable if things don't turn out so good for some period of time.
Not to put you on the spot, Bill, but does Bridgelight Financial Advisors, do you guys see any kind of relative strength when we're in uncertain periods like we are right now?
When you say relative strength, what do you mean by that?
So, for example, like certain investments, like, so like, let's look at what's going on with Iran. As you mentioned, there's an impact right now on energy and the economy. Are there any energy related investments people could lean into at a time like this?
Well, there's always opportunity during almost every kind of a period or time that we have. Mm. And it's typically unique to that time period. So there is. I always say that people should really just stick to a strategy that's working for them, not try to make major adjustments during those periods of time unless they have really good experience and knowledge in certain areas that may be a benefit to them at that moment.
That's why it's helpful to have a financial advisor. And we've got one right here. Bill Levitt is here from Bridgelight Financial Advisors for our Financial Friday. What would you say is the long-term perspective, Bill, when we're discussing geopolitical uncertainty?
We're going to continue to go through it. It's constant. People say, this is a serious situation, or we're experiencing something unusual, and it can be, but typically there's always something going on every single year. I've been doing this a very long time. It's the nature of the world we live in. The most important thing is that investors should stay invested through these kind of things. If they have the right investment strategy, it will reward them over time and going through these investing cycles. Now, everybody has their own risk tolerance, as we were just talking about, and needs a risk score. And so if you're at a stage in life where protecting your money is important, then you don't put so much money towards that. But other people should stay invested, especially if it's for the long haul, because that's where real long-term growth on money is achieved.
So at Bridgelight, Bill, for people to get kind of a reference point, how do you approach a portfolio strategy with your clients?
Well, one of the things, our job is to help clients stay focused on what they can control. Like, we can't control the headlines. We can't control what's going on in the world. Volatility investing is normal, but our job is to help people to really understand what their time horizon is, what the importance of how they're diversified, and really be disciplined in making good decisions.
And I think the other thing that we talked about the last time you were on, Bill, was the importance of having these conversations sooner rather than later, right? I mean, does this, so we were talking about the retirement and how to handle your taxes now that, we've already filed our taxes and everything. But would you say that these types of conversations should also start happening when people are in their 30s and 40s? Because, I mean, to your point, geopolitical uncertainty is going to keep happening. That's just how the world works. So I feel like you should connect with a financial advisor, as soon as you start to save money and you have money in different places and you want to make sure that you're investing properly, right?
I think everybody at every stage in life should be very cognizant of their money, how it's invested, what their objectives are. Are you on the path that you should be? As we all know, starting earlier than later is always a good thing. Consistently putting money away is one of the keys. Staying invested is one of the others. And you and I are always talking about making sure how you manage the tax impact, or you have the right tax buckets.
Mm-hmm.
But generally, everybody should be looking at these things on a pretty regular basis.
Well, and especially something else you and I talk about, Bill, is we have a real lack of financial literacy, and not just in Connecticut, but in this country. We, on average, we just don't prioritize that in education, and we don't start learning it until it's much later in life, or until, we're older and we've got kids, or we, have to save money, or we owe money, or whatever the case may be, versus we should be learning how to do this at a much younger age, but education doesn't really touch on that. And a lot of times families don't always do it. So, I mean, for that too, I think it's really good to have financial literacy and work with a financial advisor, I think sooner rather than later.
No, agreed. And, what happens to many people is they fall into financial literacy, or they're forced into it, or they learn the hard way because, obviously our educational system does not prioritize it. It's something that's seriously lacking, and so I think that's why a lot of the Americans you're talking about have fallen behind, and that is very true. They do at many times because they just don't have the education. Mm-hmm. But they got to get out there and get the knowledge, and they have to get on a path, and they have to be able to understand, basic knowledge about investing and growing money, and getting to a stage where they build wealth, and then begin to, expand the capabilities to achieve the goals that they want to.
Mm-hmm. Certainly.
But definitely in environments like this, people should have a good plan. And if you haven't looked at your portfolio, your investments, through this period, you should be paying attention to it. You should be making adjustments if necessary. Go back and look, are you in the right place? Because there's a different set of skill set for someone who's saving for retirement, Melissa, compared to somebody who is actually in retirement. And I use this little analogy, and I kind of use it when it comes to Mount Everest, right? When you climb Mount Everest, you get a guide, right? And that guide is a Sherpa. Mm-hmm. Now, that Sherpa knows the path up to Mount Everest. They know how to get to the top. They know the path. They say, hey, don't step there because you're going to fall in a crevasse and disappear forever, right?
Mm-hmm.
They get you to the top of the mountain. Now, that's one skill set, and that's typically the growth phase or saving phase of life. But when people hit retirement, that skill set should change, because here's the thing. there's a totally different Sherpa that takes you down the mountain of Mount Everest.
Mm-hmm.
And that Sherpa knows how to get down the mountain. And so that guide has a totally different skill set. And so once you hit retirement, your skill set in retirement should change. The tools that you use, the way you manage, invest money, create income is definitely different. So people should be looking at this as they go through different phases of life.
Yeah, definitely.
And making sure that they're in the right place at the right time to make sure that they don't create any, long-term harm for the success of their retirement.
Mm-hmm. So, Bill, if people want to connect with Bridgelight and be able to set up that first meeting with you, what do you suggest they do?
Yeah, you can just come up to our website at bridgelightadvisors.com, connect with us. You can have a 15-minute phone call with one of our advisors. Just talk about what's on your mind and connect with us. We'd love the opportunity.
Yeah, he doesn't have a crystal ball, but he's pretty darn close. Bill Levitt from Bridgelight Financial Advisors. I personally appreciate you, and of course, thank you so much for giving us the time here on WACC.
Thanks, Melissa.
All right, and again, that is bridgelightadvisors.com, our Financial Friday right here. I'm Melissa in the Morning. We'll be right back.